Welcome back. I'm Pratap here. Today is 19th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. And in that, Tata Steel has given an excellent profit today. And apart from that, TVS Motor is also given profit, but we never know the trade has been executed during the live market. The reasons I will tell you why we never know that once we get into that stock. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. Please click the link, you will get into this page and then scroll down to the bottom of this page, and here starting from lesson 1.1 all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the channel, it will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into analysis discussion. Yesterday we identified 5 high liquidity zones from daily time frame and 75 minutes time frame. And in that, Tata Steel is a successful trade. It is a daily high liquidity supply zone. We have fine-tuned this daily zone with 75 minutes time frame. Let me show you how I fine-tuned. So here we have a drop candle, 3 base candles and a drop candle. This is the way we identified the 75 minute zone, and inside the 75 minute zone again we fine-tuned with 15 minutes time frame. So here we have a rally candle, 3 base candles and a drop candle. This is the way I have drawn the 15 minute zone. Inside the 15 minute zone, again we have identified a 5 minute zone. So here we have a drop candle, 3 base candles and a drop candle. After that we have follow through candles and a very big move down from this zone. So it's an excellent zone to take a trade. And see what happened today. The prices entered into this zone at 9:25, 5 minutes candle. See after that how the prices are moved, and finally it reached the target at 10 o'clock 45 minutes candle. So almost in 1.5 hours your trade is completed. And this is the way Tata Steel has given a profit 22,275 rupees. As per one futures margin cost. As per one futures lot, this is the profit. And if you calculate the ROI based on one future margin cost, it has given 13.9% ROI. It is extraordinary. Our average intraday ROI is only 6.1%. So more than double ROI we got. This week we got very good profits. If you look into all the high liquidity zone trades, the profits are beyond 6.1% this week. Because of the volatility conditions in the market, it helped us get more profits from the high liquidity zones. When we get the loss, we got very minimal loss. So this is about Tata Steel and TVS Motor. TVS Motor is a 75 minutes high liquidity zone. But I told you, we got a profit, but during the market we never know the trade is executed. You have to understand a problem in TradingView. Of course, the problem in our software generation also, especially related to corporate actions. Today, during the live market, corporate action has been implemented for this TVS Motor, the dividend. Look into this dividend. In TradingView you can able to see. How much dividend? 8 rupees dividend they have given. Because of this 8 rupees dividend, the value will be adjusted. This is what already we discussed during our training course. I think in our lesson 9.1, first practical session of our phase 1 training, I clearly explained about the corporate actions, why we need to adjust with the dividend, how to adjust dividend, everything I explained. I hope you are all following that rule. And today, market is dividend adjusted. But the problem with the TradingView, during live market, actually TradingView is supposed to adjust the data, but TradingView, because they are working in the US market hours, they won't adjust until their market hour starts. Once the US market hour starts, then they will be adjusting the live data. Maybe this is a bug in TradingView, I don't know. Maybe it is a loophole in their software. We never know. But they are doing a dividend adjustment only after US market starts. That is late in the evening. So till that time, even though you are enabled dividend adjusted, the data will be showing. According to that, your zone will be somewhere here. Now what I did, by the time when I draw this zone in this stock today, dividend is adjusted. Now again I have redrawn the zone. Earlier the zone is not like this. Let me show you how was the zone earlier. Let me disable dividend adjustment for time being. I disabled. See, zone came down, right? Now let me clear this zone, you will get clarity. You all should understand this problem. This is an important lesson. This is the leg in, this is the leg out. This is what our software is also provided. So the dates are correct, no issues. But what is the problem? The values are problem. Even my software also generates before the dividend adjustment, because I generated the report the day before yesterday. Yesterday. And today market hours, live market hours, the data is adjusted. So we generated the report before the market hour starts. That's why before the dividend adjustment data my software is using. But at least TradingView should correct that. If TradingView would have corrected, my software is providing leg in date, leg out date. Based on that you will draw the zone and you will fine tune. So yesterday how we drawn? This is the way we have drawn. Even live market also the structure is like this. This is the supply zone. And if you look into the data, does it feel like you got a trade here? No, you didn't get a trade. This is the way the zone is here, the zone. The prices didn't enter into the zone. If you don't adjust. Now I did the dividend adjustment, let me do. But today in our live market, even if you click dividend adjusted, the chart was showing it like this only. Because the dividend is not applied in TradingView. During live market, prices did not enter into the zone. Because the TradingView did not adjust the data. When TradingView adjusted the data, today evening after market hours, today according to our Indian time, late in the evening, maybe somewhere around 8 o'clock or 9 o'clock, once the US market starts, at that time, they would have adjusted the data. Same thing reflected in our Indian market data also. Now this zone will be changed. Now let me click on ADJ. Here we have dividend adjustment. Always we have to enable this. Are you seeing my mouse? So here ADJ, I have to click. This I clearly explained in lesson 9.1 in our training course. Please check that video. I have explained step by step. I have explained with the diagrams and circles. So you will understand very easily. Please go through that. Now I have adjusted the dividend. See, the zone has moved up. After dividend adjustment, prices will come down. Because 8 rupees it will come down prices. Because of this 8 rupees difference, prices will enter into the zone if you redraw the zone. Let me delete. Let me redraw the zone now. See, prices entered into the zone. And prices went into the fine-tuned area. See whether they entered into the fine-tuned area or not. Let us verify. So this is a 75-minute zone. Now we need to fine-tune this zone with 15 minutes time frame. So are there any zones with 15 minutes time frame? We have a rally, 2 base candles and a drop candle. Again we have a drop candle, 3 base candles and again a drop candle and a very big follow through candle. It's a failed ERC. Further market continued this entire move. You may feel this leg out is not great, but still okay. Sometimes we can consider there is a follow through is happening in the market. Otherwise you won't consider this. But this is a big candle only. ERC candle, failed ERC candle, but it is having enough body. So this is the way you can draw a zone. And another zone you can draw like this. You have two 15-minute zones. Inside the 15-minute zones, we need to identify a fresh 5-minute zones. So let me go to the 5 minutes time frame, changing the time frame to 5 minutes. Now check whether there are any zones are available. Here you have a rally, 2 base candles. Sorry, we have a drop, 2 base candles and a drop candle. Here you can draw a 5-minute zone. Let me change the color. So here you can plan your trade if prices enter into this. But what about here? Here you have a zone you can draw like this, a 5-minute zone. But what is interesting here? Here, lot of rejections from this zone keep coming. That means a heavy order flow is here. This is an indication. Because heavy order flow is there, can we take a trade again? Maybe it is risky. Let us check whether any fresh zone is there or not. But this is a price action clue for us. But already we reached a 5-minute zone. But still you have option to get into 1 minute also. That level also you can fine tune. But why we are not doing at 1 minute level? Because you should have a very highly experienced skill to understand the actions at the 1 minute level. That's why mostly we are limiting to 5 minutes level. But once your experience grows, once you get some 4 years, 5 years or even more experience, at the time you can get into even more minute level. Properly you should assess there. Otherwise, many times what happens, for 1 minute zones, they will give stop out. So that's why we should be very careful. But one point we observed, lot of order flow is there. So can we find any fresh 1 minute zone so that we can plan a trade because all these weeks institutional orders will be there. VIX is the area, institutional order flow will be there. Previously also once I told you people this point. Okay, what we can do, go to 1 minute time frame. Here 1 minute time frame. Is there any zone? Yes, we have a rally candle, or even you can consider this as a failed ERC candle as a leg-in. You have 1, 2, 3, 4 base candles and a drop candle. So this is the way you can draw the zone. Up to here. You can consider this also leg candle, no problem. But the problem is, half of the zone is within the fine-tuned area, another half of the zone is within the outside the fine-tuned. If you take a trade here, probably our risk will also increase. That is the reason why what you can do, because price should get into this fine-tuned area. That's why take type 3 entry here. That way you fine-tune the zone. Now once enters into this zone, within this area you can plan the trade. So this is within the area. Now you can plan your trade exactly here. This is a fresh area, and moreover this entire area VIX is there, strong order flow. If price did not get enter here, you will miss anyway. If enters, you have a strong order flow here. And moreover, it is a fresh zone. Prices haven't entered into this area so far. And risk is also very minimal. Whether risk is minimal or not, look into the 5 minutes time frame, you will understand. See, 5 minutes point of view, I change it from 1 minute to 5 minutes. Now this is a very small area. Very minimal risk will be there. See what happened today, prices just entered into the zone. Because the 1 minute order flow it just gave the test and pushed the prices down. But what is your target? 15 minutes is supposed to be the target. Where is the 15 minute zone? Here you have a rally, 1, 2, 3, 4 base candles. This is the way you can draw a demand zone. This could be your target. But fail to reach the demand zone. At the same time, it is not stopped out. So generally you need to exit. But where to exit? Probably before market closing hours you need to exit. Or if your broker is giving you last 45 minutes, you have to exit if you give the time. At the time you can. But if you get into 5 minutes, that gave you an entry today, an option to exit from the trade. The 5 minutes time frame, this is the one. You have a drop base rally, draw 5 minute zone. See, in this candle it got 15 hours, 10 o'clock, you got an entry. That way you would have exited at 3 o'clock, 10 minutes. You may ask, we have to exit at 2:45. Otherwise our broker will automatically, he will. So before 2:45, whichever the candle is there you exit. So this is the 2 o'clock 40 minutes candle. You would have exited here. That means almost same price. You would have exited. That means you would have got a profit today. But TradingView does not display this data. It might be difficult for us to manually calculate these levels, dividend adjustment formulas building. That is a complicated task. Because we don't know the exact levels where we need to draw, you might have missed the trade. If you are using some other software, and if your software provider has provided the option to adjust the dividend before market start hours, probably you would have got a successful trade today in this stock. But anyway, I'm not considering for our high liquidity zone list. But the point you should understand, you would have got a profit. How much profit you would have got? At 2055 you would have taken a trade. It went up to 2056, around 2055. Let us assume that was your trade. Minus, let us assume you exited in this candle just before your 245 candle, 244 candle. At the closing of this candle, what is the closing price? 2035. 90 paisa. That means 2036. Let me round the value. You exited at 2036. So you would have got 19 rupees profit on this stock. Approximately how much profit we would have got? Let us look into the margin calculator. I don't know in this time he will provide the data or not. But 350 is the lot size. No, he is not providing what is the margin cost and all. At least let us say how much profit we would have got. Into 350. You would have got 6,650 rupees profit. And ROI is depending on the margin cost. We don't have the data. But approximately you would have got this value, this profit. And when it happened, when you got the trade at 1345 candle or 1350 candle, in one of these candles, you got that, you would have taken the trade. If you get into 1 minute, you will get even more clarity. So in these candles, you would have definitely taken a trade. 1, 2, 3, 4, 5 candles. After that, prices came down. It is how this zone holded the prices, not letting the prices go beyond this zone. By the time already your Tata Steel trade completed, and you would have taken this trade, maybe you would have got another 6,000 rupees profit. Another 6,650 rupees profit you would have got. Because the TradingView is having the limitation, dividend adjustment won't be adjusted immediately. And as per that data, we didn't get a trade at all. If they don't adjust the dividend, we won't get the trade. Anyway, it's an important lesson. Why I insisted all you people, you should adjust your data with the dividend. Dividend adjusted charts only you need to analyze. I explained in lesson 9.1. Now practically you are seeing today. If you don't adjust with the dividend, how we will be missing many opportunities. I have seen many demand and supply zone traders, they don't trade with the dividend adjustment. Instead, they will give you advices. No, we don't follow demand and supply zone traders. When I talked to someone earlier, this is the point he told. No, we demand supply zone traders don't use the dividend adjustment. But I know how important it is, because I've been using dividend adjustment for the last 22 years. From 2002 or 2003 onwards, continuously I was using only dividend adjusted data, because at that time itself I realized dividend adjustment is very, very important. Okay, anyway, we didn't get a trade. Definitely we missed this trade because of TradingView limitations. Okay, apart from what else we have, what are the other stocks? So we'll go. Idea we are already seeing last 4 days. We already discussed this one, so I don't want to get into idea. JSW Steel is a daily high liquidity zone. I have already fine-tuned this zone. Prices today, prices didn't enter into that area. See, but the daily EMA confluence, how it pushed the prices. Probably that is EMA. This is not about high liquidity trade. Previously we discussed about EMA confluence. In lower time frames, if there is any supply zone, you would have taken a short trade here. That is EMA confluence. I already explained in lesson 18. Is it lesson 18? EMA confluence? 17 or 18? There I already explained EMA strategy. How to trade the stocks based on the EMA strategy. See here, earlier it was a price overextension. See the overextension. And this overextension is completed because of the profit booking. The moment prices entered into this EMA, at lower time frame, if you don't find, in daily time frame, if you don't find a zone, lower time frame you can look for a zone, there you can plan a trade. The lower time frame zone, the immediately available next lower time frame. If it is 75 minutes, 75 minutes. If not 75 minutes, next 15 minutes, whichever is available, go in that order. Whichever the one earlier you get a zone that. Suppose you may ask a question, if there is no zone at all, then don't take the trade. That is quite risky. If it is stopped out, you never know when it is going to be stopped out. Institutional order flow should be there. Otherwise it is risky. Okay, anyway, this is a daily zone. We have a rally, base to base candles and a drop. And inside I identified 2 high liquidity zones. Two 75-minute zones. So this is one zone. Here we have a ERC candle. This is the leg-in. We have 4 base candles and a drop candle. This is a ERC candle. Still, why I considered is there is a follow through and this entire wick has been covered. That's why I considered. Generally, I use this technique at lower time frames only. And next you have one more drop, 1, 2, 3 base candles, again a drop. This is a good leg out. Then when it go to the 15 minutes time frame, here I identified drop, base drop. It's a good 15-minute zone. And then again we have a rally base drop. This is also excellent. And both are fresh zones. So again went to 5 minutes. We need to check the price structures at the 5 minutes. If they are good, then only we confirm the zone is a good zone. So here we have a drop candle, again 2, 3 base candles and a drop candle. And follow through candle is also there. And here fine tuned the 5 minutes. The risk is a little high than normal. Maybe it is within limit, within our 2% limit only. But if you feel you can't bear that much, go to 1 minute time frame and fine tune the zone. So here again rally, 3 base candles and a drop candle. It's not very great, but okay, because the complete move has here a very big move. And we got very good base candles. That is more important. The base candles are good. Leg out is not great, but okay, because there is a good move without any non-stop move. So definitely it is a valid zone. Order flow is here. It is a confirmation that there is a order flow. This is how generally I take deviations sometimes. But still I identify the real order flow. That is only just experience, that's it, nothing more than that. Once you keep on doing a lot of trades, you will also get clarity. You will be observing so many stocks. You will get clarity. All these demand and supply zone rules, whatever strictly we are applying, they are for the initial level when you are learning the concepts initially, because safe way you have to do. You can't take more risks. Once you get experience, you can take more risks. At the time, you will understand where to compromise, where not to compromise. Your experience will tell. Let me show you one chart today, the Indigo chart when it is failed. Why I didn't compromise, I will give you the reasons, you will get clarity. See here, I compromised. Indigo also the leg out is there, but not great leg out like this, but I didn't compromise there. Why, you may ask a question, why you compromised here? Why in Indigo stock you did not compromise? You may ask that question. That's why I will tell you the reasons. That is what experience means. Such kind of experience you will also gain in the coming days. Anyway, I am sharing my knowledge. Apart from the more and more you trade in the coming days, the more and more experience you will get. Already many of you people are doing paper trading. Probably next week onwards you will be started trading. We are getting into the real trading because we are next week we will be completing in our second phase of the training program. In a small way you will start initially your trades. Once you get experience, you will get into bigger trades. So this is JSW Steel. How we fine tune the zone. Tata Steel we already discussed. TVS Motor. Remaining is Indigo. Indigo zone is violated, but we know why it will be the reasons behind why the zone is violated. This is a 75-minute zone. First, let's get into the 75 minutes time frame. So easily the zone is violated. This is a rally base drop, very good follow through candle. Looks very excellent. Looks like for 75 minutes time frame point of view. And moreover, wicks are there. Wicks means a lot of order flow will be there. That is the indication. That's true, but not always. Why not always? 5 minutes time frames will tell you why it is not always. That's why always I am insisting you guys fine tune up to the 5 minutes level. That's why I gave a lot of importance to fine-tuning technique based on zone confluence. Especially lesson 16.1 and lesson 16.2 are the top most important concepts for you. Okay, let's get into 15 minutes time frame. How the zone looks in 15 minutes. Okay, this is also not a problem. Good, excellent. We have a rally, 1, 2, 3 base candles. We have again a drop candle, lot of follow through, so much big move. Everything is positive now. Now you get into the 5 minutes. You will understand why this zone will be violated. Look into this zone. Look into all these candles. How do you feel when you look into all these candles? Lot of consolidation here. There is no proper structure. At least we have a good leg in, base, drop. You would have considered this zone. Because recent price action, definitely institutions might have added a lot of new orders. But by looking into this, how can you tell base candle, base candle, base candle, base candle? Even if you want to compromise, there is nothing is there to compromise. All are small candles or medium size candles. And this is a leg out. How can you consider this leg out? There is a, maybe even if you consider at least follow through candle, a good structure is there, leg out, you would have. You may ask a question, there is a big move down. Yes, big move down. That is not enough. But before that, the kind of price action within the zone important. Here, lot of pending orders are consumed. When so much of pending orders are consumed, how can you plan a trade? Maybe this is a good zone. Drop, 2 base candles and drop. Actually, the move started from here. Drop, 2 base candles and drop. But this is not a fine-tuned zone. When fine-tuned zone is not, if it is not a fine-tuned zone, we never know how strong the institutional order flow here. If it is a fine-tuned zone, definitely we would have considered this trade. Drop, 2 base candles. We got a drop candle, follow-through candles. After that, a very good move. There was again some consolidation here. Okay, fine. At least some good move from here to here. But here, this candle itself is not at all a convincing candle. Even to compromise. How I am able to? Because my experience clearly tells this structure is the worst structure, first of all, here. This is a small zone, 5-minute zone. The small zone is not telling us there is a strong order flow. What it is telling? Here, whatever the order flow, already I consumed here. That is what it is telling. Because all these candles are consumed, all the orders here. But here, before that, let us assume here we have a good structure of leg-in candle, you have a base candle, here a very good drop candle, even though earlier there is a lot of consolidation, still you can consider this zone. The reason is you have a good leg in, you have a good base, good drop, even though before there is a consolidation. Because the recent action, institutions added a very good supply here. But such kind of actions are not happened here. After this consolidation, there was a move down. There is no proof here. The institutions added new orders here. That is the reason why definitely this zone should violate. That is what happened today. Easily prices moved. See here. Maybe somewhere here some order flow is there, I think. That is not good enough. Some rejection down, but later on again, demand pushed it. It is violated. After that, institutions here, they created a new zone outside high liquidity. They pushed it down. But that is a different story. If you want to plan a trade on this normal supply demand zone price action, whatever the rules you land, your bullish trade setup, bearish trade setup, if they support, definitely you can plan your trade here. Next time, see, prices came and they came down. If those rules supports you, you would have taken a trade here. Based on normal demand and supply zone, bullish and bearish trade setup rules. But we are using a special concept, high liquidity zone. Why high liquidity zone is important? We don't bother about the trend. We don't bother about the price direction. We don't bother about the location. We don't bother about the odd enhancer score. We just ignore everything. It is a high liquidity area, that's it. Institutions kept strong order flow. Whatever the condition, at least during intraday, it should give us a 15%, a 6.1% ROI related trade. Average, I'm talking about average. Sometimes we got even 3%, 4% return also. Sometimes we got even 9%, 10%. See, today, Tata Steel, we got around 13% ROI we got. But the average is 6.1. That is what I'm trying to say. So high liquidity zones, we have such kind of guarantee. How we got such kind of guarantee? Because we've been monitoring our data consistently for the last 5 months. This is the 6th month is going on. 6-month data is a strong proven data. Nobody can object that data. And moreover, we have seen different market conditions during these 6 months. We have RBI announcements are there, US Fed announcements are there, even company results were there, even inflation figures, everything was deducted, in between some news from US market against, even there were some wars, Israel war, everything, many things we have seen incidents. None of these incidents so far affected our high liquidity zones. Now we are testing the elections period. When you are testing the elections period, how our high liquidity zones going to work, we will be seeing. This is the final test probably for the next 2 months. Do they work? Do they give very good profits? Or do they give more stopped out orders? Will be experience. In all these conditions, if they test, this is a rock solid proven data. And apart from that, so far we have seen a very good success rate for these zones. So that is the reason why we are giving more priority to these high liquidity zones related concepts. Anyway, the first lesson in phase 3 is going to be on high liquidity zones only. There all people will understand how to make use of our data, software data, and how you can plan your trades, what you need to focus, what you need to ignore. All the things I will explain. Probably you have multiple videos in that first, because so many scenarios related to high liquidity concepts. One by one I will explain. After that, people will be in a position to trade based on your high liquidity zones. But only point is, those who can spend your time on every day during market only can make use of this. They are not like set and forget trades. They are more like intraday returns. Actually, they are short-term trades, but giving a return in the intraday itself. That is the point. Strictly speaking, we should not call them as intraday trades, but they are short-term trades. But unfortunately, their profits are giving, I don't know, fortunate or unfortunate, their profits we are getting on the same day itself. That's why people who wants to take trade on the same day and exit on the same day, they are feeling trouble because their time is not available. But the advantage we are getting, with compared to the intraday returns, we are getting 5 to 6 times more profits we are getting, 5 to 6 times. Intraday traders, they are happy with 1%. 1% trade is an amazing, excellent. And 2% intraday return in a single trade is a super trade for them. But when we get 3% trade, that day we are saying, okay, profit is very less for our high liquidity zone. That way we are feeling. 6% means, yes, it reached our benchmark. That is how we feel. Beyond 6%, we feel, okay, that is good, excellent. That way we feel. See the difference between intraday related traders and our high liquidity zone trades, even though we get the profits during the intraday. So anyway, this is about high liquidity zones we generated in our previous report and how we fine-tune these zones. Hope this will be a good, this session is a good learning for you. Let us all meet again in our next video. Thank you.